All right, friends, welcome. Long time no see. Everybody, we are in downtown Miami, finally back live streaming after a crazy volatile week on Wall Street. It seems as if we are getting a much needed washout of speculators, not only on Wall Street, but within the cryptocurrency space as well. And we've always been talking about on the stream about how I've always said, the vast majority of the alternative cryptocurrencies and the alternative coins out there will probably fail. If not, they're either probably outright scams altogether. Now, we had a major failure, about $40 billion stable coin go to zero. Now, I'm not going to say that it's a scam. I'm not going to say that Terra Luna was 100% a Ponzi scheme, but this just reiterates my point that a lot of these alternative currencies that are claiming, if you lend out the coin, you could yield a 20% risk-free return. I think a lot of those things will fail, and I think we saw that with this huge $40 billion blow up. I mean, it's bigger than I think the Lehman collapse now in terms of size, maybe Bear Stearns. And it just goes to show you guys gotta really be careful out there. And I always reiterate, you guys always know we talk about this on the streams. If something seems too good to be true, especially in the cryptocurrency environment, it usually is. A lot of these DeFi protocols, lending platforms within the cryptocurrency environment, 9 times out of 10, they're either outright scams or probably built in a way that it's not sustainable. Now, I will not make any claims that Terra Luna is fraudulent because it's just so fresh on the mind, and I think a lot of people lost a ton of money, and I feel so bad about that. But the only thing I could say is use this as a learning experience to say, look, if something is offering me a 20% yield risk-free, well, then it may be either too good to be true or not sustainable. So we'll talk about that a little bit more tonight. We will also talk about the potential near-term or at least short-term bottom that we have in the stock market. I think we could probably rally back to the 50-day and 200-day moving average, and then we'll talk about earnings. So we did have a couple earnings reports roll through. We are at the tail end of earnings season, so we'll recap that. And then to end the stream, we will talk about forward earning projections as well. But last but not least, everybody, let's see who we have in the chat. We have Miss Brown Eyes here. Thank you, Miss Brown Eyes, for the $2 donation. You are too kind. Always good to see you. I see Mr. Ming is here. Welcome, Mr. Ming. Kenneth is here, says, hey, Tom, what's up, brother? Good to see you. Kenneth. Sally is here, says hi. Andrea says hi. Tamara says, good evening, everybody from Texas. Welcome. Love that. So we are actually in Brickell tonight, which is I guess you could consider it Miami's financial district. Beautiful night. It was about 80 degrees today in Miami. Clear skies, beautiful. And I hope all of our viewers from New York, hopefully the weather can improve. I think it's raining today in New York, so hopefully all of my friends in New York are staying dry. Laura M says, hey, Tom, glad to see you back in sunny Miami. Thank you, Laura. Appreciate it. The one and only Ruby Falcone is here. Good to see you, Ruby. Chris Beeman from Arizona. Always a pleasure to have you here. 61 says, welcome back to Miami, Tom. Thank you so much, 61. Good to see you. Heather says, good to see you back in Miami. Thank you. Appreciate it. So we do have some skateboarders here. Western Mass Dave says, hey, Tom, a heavy schedule this evening. Good to see you. Lewis says, yup, Jersey is blah. So what's going on with the weather over there? Is it just rainy or is it still cold? Because when I left, I did post 2 standalone videos on the channel just to hold us over until we could get back streaming. It was a horrible time in New York in terms of weather. Mother's Day weekend was a total washout. So hopefully that will improve as the days go on. Jimmy T is here. It's good to see you back in Miami. Welcome, Jimmy T. Soho guys, says Tom, bring back the 8.5. Good to see you, Soho. Michelle McGraw. Lily, Sabrina Fair. Good to see you. Charlie Richardson, welcome. So we are looking at the W Hotel here in Miami. But the thing I'm really excited about tonight is the Miami Riverwalk. I've actually been working out of a different office. Usually I work out of the WeWork right here in Brickell, but I've actually been working across the river in the Southeast Financial Center. And usually on my lunch breaks, I've been walking around the Miami Riverwalk, and a lot of the sea turtles and manatees are out. I've been seeing a ton of crazy wildlife. It's beautiful. So hopefully we'll get to see some of that on the stream. We will be on sea turtle watch. Samantha R is here. Good to see you, Samantha R. Chris Beeman says, Tom, weather's going to be 100 degrees plus here in Arizona over the next 5 days. Yeah, and it's also that dry heat too. You know, Arizona always tends to be that very dry heat. But this is the First Presbyterian Church here in Brickell, with the beautiful full moon in the back. Fred X is here, welcome. Michelle K says, Tom, it was raining in New Jersey, but now it is a nice night. Well, that's good. You know, it has been a crazy, crazy week. For some reason, a lot of customers are starting to move forward in their buying cycles. So I've had probably about 5 to 6 customers or prospects all wanting to move forward in their deal cycle at the same time. So I've been really, really crushed ever since I got back to Miami. So do apologize for the lack of live streams, but we should be back to our regular scheduled programming now that it is the weekend. Jason Francis is here. Good to see you, Jason. The one and only British Gray is here from Tampa, Florida. Ryan Royals says, hello, Tom and everybody. Is it warm in Miami tonight? Yeah, it's pretty warm, and it's actually not too humid, which is sort of uncharacteristic for this time of year. You know, I woke up, it was about 80 degrees today, bright sunshine, but I think it may rain all weekend. But definitely a nice change from New York, because Mother's Day weekend in New York was a total washout. But guys, crazy, crazy turn of events in the markets. I think there's been more wealth or more money wiped out in terms of market capitalization overall in the stock market, more so than 2008, financial crisis. I think to the tune of $17 trillion now, which is wild. And we have had the horrible unwinding of Terra Luna, which is one of the very, I would say probably one of the most notable stablecoin protocols. And, you know, I've been very critical of, well, let's just say this, not all stablecoins are bad, but I think anytime you have a protocol that is promising risk-free returns of about 20%, well, I think that, you know, maybe there could be one of two things, right? You know, there's an old saying that if it seems too good to be true, it probably is. And I think, you know, I want to say allegedly because this is so new, I think there could have been some nefarious activity going on there, but you guys know my stance. I think the vast majority of alternative coins or altcoins, they're either outright scams or Ponzi schemes altogether. And it's really unfortunate that this had to unwind like this, because it's going to give everybody else a really, really bad name, and the regulators are going to be out in force attacking this, which I think could be a good thing and a bad thing. The good thing is we'll probably get more regulatory clarity on, you know, self-custody of cryptocurrencies like Bitcoin overall, and how can institutions get exposure to this. But I think the bad thing that's going to come out of this is it's going to paint Bitcoin in and of itself as a bad name, that yes, everything is a Ponzi scheme, everything is a scam, when in actuality there's just some bad actors. Now, I'm not saying what happened at Terra Luna was a Ponzi scheme or a scam. I sort of want to hold back my personal thoughts on that. I think if you guys have been watching the stream long enough, you probably know what my answer is to that. I will hold back because it is so new on everybody's minds now, and I think a lot of people lost tons of money. I mean, this was a $40 billion asset here that went to zero overnight. But I think it just goes to show, look, if something seems too good to be true, if you could deposit stablecoin and lend it out and supposedly gain a risk-free yield of 19.5% or 20%, I mean, I think you could use your best judgment and say that's probably, you could probably put 2 and 2 together, but it's unfortunate that a lot of people had to lose a lot of money in this. And I think regulators, Janet Yellen is already coming out of the woodwork calling for mass regulation of the space, which I don't think is bad in general. Hopefully that will conclude some of the unknown about, the SEC will give a stamp of approval on a true Bitcoin ETF. So just be careful with those alternative coins. You guys know my take on a lot of the altcoins. Matthew is here. Good to see you. NE says, can confirm I lost $100 following the idea of investing $100 into a top 10 coins by market cap. This is NE. Soho says, Tom, the Dow will go to 0 and pensions will go belly up. Interesting perspective, Soho. Lena Sandoval is here. Jean says, hello, Tom. Two Wheel Freedom says, buy the dip, please stay away from the meme coins. Yeah, I mean, and I think I've been sort of beating a dead horse about this because I think I was even asked about that particular altcoin on the channel about 6 months ago. I've been through a lot of these cycles, right? I mean, I lost money in a lot of this garbage when I was in college, in 2015, 16, 17. So I've been around the block, and a lot of this stuff is garbage. So the only allocation I have is to Bitcoin and a little bit of Ethereum, which I even think Ethereum is really, really big risk. But a lot of the other cryptocurrencies, I would say probably 90% of them are either outright scams or unregistered securities, which could be a real big issue very soon now that the SEC will probably provide more clarity in terms of regulation. Hey, Wesley West is here. What's up, Wesley West? So we are now here in Miami Riverwalk. So we're gonna go down here. I wanna show you guys just how high the tide is. The water is almost coming over the edge. It's almost kind of insane to see. Smee Media says, hello, Tom. Thank you for the stream. Thank you for being here, Smee Media. It's good to finally be back on the stream. We've been MIA for probably about, I think it's been the longest stretch we have not streamed in a while. NE says, Tom, I think people just get excited and invest in altcoins due to seeing how high they can go and the idea of how investing a few hundred or a few thousand can make you a millionaire. Yeah, so I think, I think a lot of bad actors capitalize on that, right? So it's not the experienced investors who lose a lot of money in this stuff. It tends to be the newer investors that may be a little bit of a novice or a rookie, that they're sold this pipe dream that if you buy this coin or you buy this stock, it's going to go up 1,000%. And I think it's unfortunate. And one of the correlations that I draw to this, a video on YouTube in relation to the stock market or in relation to the cryptocurrency markets in general, you'll notice a very fascinating correlation in regard to the amount of viewership the channel gets, in relation to the amount of subscribers the channel gets, and the quality of the content. Let's just say that. And I'm not trying to be mean to anybody, but a lot of the times you'll have these people that, if anybody who has at least a little bit of a finance background watches any of these channels, they'll really tell you that they really don't know what they're talking about. And they come off almost kind of cringy in a way. They'll have the title, top 5 altcoins to buy that are going to go to the moon, and the thumbnail will be with the guy, his mouth is open and all this nonsense. Unfortunately, that is what the YouTube algorithm feeds to people, because there's a lot of people out there that are looking for a quick fix, that are looking for the next get rich thing. And I think sometimes you have to learn the hard way that all of that stuff is nonsense, and in every market cycle, there's people that will be pumping a specific coin or a specific stock, but at the end of the day, earnings matter and fundamentals matter. And in an environment that we've had of very low interest rates, yeah, a lot of that nonsense can persist and go on, and people can make a lot of money in unprofitable businesses. But during a quantitative tightening cycle, a lot of that stuff goes away. A lot of that euphoria goes away, and then everything sorts to come down back to reality. I gotta get some water. Otto is here. What's up? Good to see you, Otto. Welcome. Western Mass Dave, good to see you. Otto says, hey, Tom and everybody, welcome. Yeah, Helen says the king tide. Yeah, check out how high the water table is here. It's almost coming up over the seawall here. Insane. Hey, Quinn says, so good to hear your voice again, Tom. Good to see you, Quinn. Thank you for joining. Yeah, Shar says, due to the full moon, the tide is always higher. You know, I think you're right. I'll give you guys a shot of the full moon here. So we're overlooking Brickell Key, and you can see the full moon right here. But yeah, in jest, everybody, you know, if something, you know, seems too good to be true, like if you see something on social media or YouTube where a particular person is saying, hey, buy this particular coin or buy this particular stock because it's going to go up 10x or 20x, nobody knows where it's going to go. And you should always revert back to the fundamentals. So if a company is losing money, if it doesn't have any free cash flows, if it doesn't have any earnings, it's probably not going to go anywhere. It's probably going to go down. And the only reason why a lot of these high flyer stocks have gone up so much over the past couple of years is because of a quantitative easing cycle. So when the Federal Reserve drops interest rates to zero and prints a bunch of money and buys mortgage-backed securities and buys US Treasuries, well, that creates an environment of risk, or a risk-on environment. But a lot of newbie investors are not familiar with the risk-off environment when interest rates are going up, when the Federal Reserve is unwinding their balance sheet. So instead of buying mortgage-backed securities and US Treasuries, they're actually selling them and letting them roll off the balance sheet. That is what crushes a lot of stocks. And you'll see the stocks that tend to have more earnings, those are the ones that tend to go down less. So just be careful who you listen to, and just don't buy anything because you hear somebody give a stock tip or something like that. Well, let's look for some manatees. I've been seeing a ton of manatees and sea turtles here all day today. I think that may be one right here. Let's see. Ooh, no, I think that's a coconut. I thought that was a manatee, but it's a coconut. Hey, Joe Hernandez is here. Welcome, Joe. Happy Friday to you. Hope we're having a good one. The Investigator says, walks on Wall Street. I know you do a lot of business in New York, but glad you're back in Miami. Thank you so much. It's good to be back in Miami too. The weather has been getting to me a lot in New York. Photos from around New York, says Tom. Today is a waxing gibbous moon. Interesting. Gregory says, if somebody tells you to buy a stock, you would think that they would just buy it instead. True. Wesley West says, lately I've been enjoying my sports, especially baseball. The Yankees got over 20 wins this season. You know, I wanted to go to a baseball game when I was in New York, so I'll be back in New York the week of the 25th. So I'm going to be in Miami all next week. But then well, let me rephrase that. Oh, wow, we have the drawbridge going up again. 2 times in one night. So I'm going to be in Atlantic City, New Jersey for the 25th, probably the 26th. I'm going to try to actually get out of it. Only stay one day in Atlantic City, come back to New York on the 26th. So I'm going to be flying into Newark, New Jersey, probably on that Monday. So I think not next week, but the next week we'll be back in New York streaming. But, well, at least I'll get to have one good week in Miami. But I do have to sponsor a cybersecurity event that is going on in Atlantic City, New Jersey, the week of the 25th. Forever 18 says the down of market is actually a currency defense war. Government take the money back from the market. We should buy in dip, otherwise U.S. economy will be controlled by foreigners. Interesting thought process there. Interesting thought process there. Good to see you. For the love of God, welcome. So the drawbridge is up, but there's no boat coming across. Hey, Michael says, Tom, do you think Elon Musk is playing a risk with Twitter, considering his determination to change the dynamics of the company? Stock has gone up, but then he delays. Is that a tactical play? Well, I think Elon Musk may realize that he probably is overpaying for the company, and now that stock prices are coming down, he probably wants to renegotiate that deal. Again, that's not a fact. That is just what I think. I think Elon Musk has realized Twitter's probably not worth that amount. And if you guys remember, we actually did a stream the day that Elon Musk put in that bid for Twitter. And one of the breaking news cycles that came out that day was there's a probability that about 5% of Twitter's user base is actually not real. They're all bots. So if that's the case, and Elon Musk can prove that along with his team to the courts, well, he could probably justify purchasing Twitter at a lower valuation, because he could say, look, I put my bid in on Twitter assuming that those 5% of users were not bots, but they turned out to be all bots and not real people. So that's going to bring down the valuation a little bit. So I'm not sure he really has a leg to stand on, but I think he's just using this quote unquote delay to probably renegotiate the terms of the deal, because he is overpaying in my opinion. Roberta says, Tom, not sure you should walk around Atlantic City at night. Yeah, so Roberta, we're probably not going to be able to stream. So I'll tell you what the event is. So it's a cybersecurity event. I'm going to be there all day, but then I think at the end of the night, I have to take everybody to this place called Top Golf. I'm not sure if anybody's heard of it. It's sort of like a driving range, and there's like food and stuff like that. So I have to do the whole dog and pony show. Hector is here. Welcome, Hector. Good to see you. The Investigator says, walks on Wall Street. Who knows, in 5 years, you may have a yacht park there. With your knowledge and hustle, anything is possible. Appreciate that. Thank you, The Investigator. You know, I'm still waiting for this boat to come by. Maybe the bridge is stuck up because there's no boats, and there's probably a mess of traffic now. Sabrina says, yeah, Tom, we have Top Golf here. Photos from around New York says, how is your drive? Probably pretty bad, probably pretty horrible. I'm not a big golfer. I want to get into it a little bit more because a lot of deals are made on the golf course. And as I've moved up into enterprise sales, I've noticed that a lot of the C-level executives at major companies tend to be big golfers. So I think I need to work on my game a little bit, but I'm not a big golfer, not really a big golf fan, but I guess I'll have to learn. Oh, check this thing out. So it's being towed by this little guy. The Legend is the ship's name. Safety first, indeed. Wow, that thing is kind of cool. So, correct me if I'm wrong, but is this one of those cargo ships where they bring the containers off for the, I think that's what it is, right? Yeah, so photos from around New York, you have a good point. So Chelsea Piers has a second floor golf range. I've actually been there. So Chelsea Piers also has a really nice soccer field too. So the bridge is coming down. This guy better move pretty quickly. The bridge is going to come down on the guy. Jamie Massetti says, Tom, the best deals are done over a steak and a glass of wine. That is true. I used to take a lot of clients out to dinner. A lot less so now. Well, let me rephrase that. A lot less so last year, obviously, for COVID reasons, but hopefully we will get back to that cadence. Miguel says, hey Tom, I was thinking about getting into tech sales. I'm in my final year of college studying econ. Any tips? I think that's a fantastic idea. So here's one tip I will give you. And I think this is very important for the group. So if you're looking to get into enterprise software sales, enterprise tech sales, or tech sales in general, and you are just coming out of college, really pay attention to what is going on in the global economy right now, more specifically in the United States, and I'll tell you why. A lot of software as a service companies, a lot of startup companies during the heyday. So if anybody was in tech sales between, let's just say 2013 until now, has made an absolute fortune, relative fortune, small fortune, very good income. Here's where you have to watch out. Now that we are in a tightening cycle from the Federal Reserve, interest rates are going to go up. That means money is going to become more expensive for businesses. Now, a lot of these startup companies, these software as a service companies, they're not profitable yet. So that means the only way that they are surviving is either from injections from outside investors like venture capital, things like that, or just borrowing money at extremely low rates. So here's what I would say. If I had to do it again, if I was entering the tech sales workforce right now, this is not the time, in my opinion, and this is just my opinion. This does no way, shape, or form mean I'm right. This is just from my experience is what I'm gonna say. This is not the time to come out of college and work at a startup at first. Because a lot of these startups, you're gonna start to see they're gonna go on hiring freezes, and the compensation structures are probably gonna go down a little bit. So here's what I would do. I would look to the very well-established and well-capitalized tech companies to go sell at first. This way, you'll build fundamental skills of how to operate within a larger organization. You'll actually understand how a business works and how a business operates from a enterprise scale. So let's say if you go work at a Salesforce and you're an account executive at Salesforce. Well, Salesforce is a very well-capitalized company as opposed to a startup with 50 employees that they're probably getting all their VC money and all their VC funding pulled. And it's going to be very hard for them to borrow money at very low rates. So if you start off first and just learn the ropes of how to operate in an organization, learn the hierarchy, if you work at a Salesforce, an Oracle, an SAP or something like that, like a big organization, even if you want to work at one of the big telcos, right? If you start off at T-Mobile, Verizon, AT&T, it'll hedge your risk a little bit because not only will you learn the ropes of how to sell in a large organization, I think you're going to get a lot of experience, proven experience. Once you get 1 or 2 years of account executive experience at a large company, especially if we go into recession, you're probably going to have, number one, job security, right? So you're less likely to get laid off. If you're a frontline salesperson at a Salesforce, Oracle, SAP, you name it, AT&T, T-Mobile, any of the big tech companies or telcos, the last people that they lay off are the revenue generators, right? So you're probably going to have good job stability. You're probably going to learn a lot. You'll probably make a decent amount of money. And then as economic conditions improve, because they will, then I would take your talents to a startup and work as an account executive or enterprise account executive where you can negotiate, an equity offering in your package, in which case you'll probably make a lot more money. But right now, it is not the time, in my opinion, to work at a startup, just due to the credit cycle we're in the market cycle. So hopefully that gives you a little bit of advice. I know there's going to be a lot of people who disagree with that, but that is just my personal opinion. Helen says application for mortgages are down 74%. Yeah, so what is a 30-year fixed rate going for now? Probably over 5% now, no? Samantha J is here. Good to see you. Sabrina Fair says, Tom, can you expand on the meaning of SaaS, software as a service? What does that mean? Yeah, so any software that is distributed over the cloud where customers are paying on a subscription basis. So for example, you sign up for a gym membership, you pay 10 bucks a month. If you sign up for, let's say, a CRM tool, you need Salesforce or Zoho or something like that. They're probably going to bill your organization, $15 to $20 per person or per license on a reoccurring revenue model basis. Or an ARR model, which is annualized reoccurring revenue. So just think about it like a gym membership. You pay 10 bucks a month every single month. So instead of buying one software subscription one time, they'll break that up over many months and you pay that in perpetuity so long as you're using the software product, if that makes sense. Cindy Foley is here. Says, hey Tom, welcome back to Miami. Thank you. Good to see you, Cindy. Sammy Basie says good night. Gorgeous looking full moon. Yeah, Helen says, Tom, you got to learn to golf. I know. Kel, welcome. Good to see you. Elaine says Friday the 13th with the beauty and technology of Miami. Good to see you. Sherry says, hey Tom, when will we see the skateboard? So very soon. I think the next time we're back in New York, hopefully the weather's a little bit nicer. I know the weather is horrible in New York now, but hopefully it'll get a little bit better. We'll be back on. Mr. Braden says, do you live in Miami? I do live in Miami. I do. Smee Media says, Tom, there was a New York Times digital article on how to calculate your inflation rate. Did you see it? No, I did not see it, but could you share that in the chat? It's probably very useful. But to your point, everybody probably has a different hurdle rate, as you say. But let us head back up to the street. So my phone is like half charged tonight, so it's probably going to be a very short stream, maybe only an hour and a half. But hopefully that answers your question about getting into tech sales. But now I would definitely start off at more of a well-established company because borrowing costs are going to go up. And, I actually wrote about this in the Behind the Street newsletter a couple of months ago about how a lot of the companies within the Russell 2000, they're considered zombie companies. So really the only is because they could borrow money in perpetuity at lower rates to pay off the interest of their further borrowed debt. So as interest rates go up, it's going to be harder for these companies to service their debt, and that's why they are called zombie companies. About zombie companies, I think Hey, Lisa's here, says, hey Tom, I believe I heard adjustable rate mortgages are coming back. Yikes, I hope not. I mean, I don't know anybody who would ever accept an adjustable rate mortgage. I mean, unless they're being sold that product in an unethical way, I would stay well clear away from that stuff. That is what caused the 2008 financial crisis. That along with a bunch of other things, very low income verification, very low qualifications, but the adjustable rate mortgages were horrible. When interest rates went up, people's monthly payments ballooned, causing massive defaults. Yeah, photos from around New York says, Tom, if you don't read the contract, ... Jones says, Tom, I'm looking forward to the skateboarding video coming soon. 61 says, hey Tom, funny AK is live streaming now by the new Aston Martin building. Very cool. So I think our phone will probably run out of battery by the time we get over there, but maybe we'll run into him. Hey, Lewis is here. Says, Tom, good to see you again. Welcome, Lewis. Nick Rocks, Countrywide Mortgage was notorious for arms and balloon mortgages. Yeah. Yeah, I mean, I couldn't imagine any of that stuff coming back. I don't know any bank who would underwrite that deal. But yeah, I mean, for everybody in the chat, I think we're all smart enough here never to do that. And that's why I think, you know, if somebody is getting sold an adjustable rate mortgage, I mean, the only plausible reason why I would say that is maybe they don't know exactly what they're getting into. Who knows? Western Mass Dave, Tom, you hit the nail on the head with 2008. Good to see you, Western Mass Dave. Mike C says, watching while I'm flying over Idaho and into Seattle in 45 minutes. Very nice, man. Well, hopefully you have a fantastic time wherever you're going.
Is that him?
And a beautiful, beautiful time. A lot of traffic here in downtown, well, Brickell. Baymax is high. Good to see you, Baymax. Yeah, Gregory says sounds like New York. Yeah, so I mean, I'm sure everybody's noticed by now, but there was a huge, massive collapse of Terra Luna, which was one of the most notable cryptocurrency projects, one of the alternative coins, one of the stable coins. One of their protocols essentially went bust. And, you know, I've always said you really, really got to watch out for a lot of these altcoins. You know, as I've said, I personally don't invest in any of the altcoins. I think a lot of the alternative coins are probably outright scams, if just not sustainable altogether. It's very, very similar to what happened in the year 2000 with a lot of these unprofitable tech companies going on the exchange, trading at ridiculous valuations, and a lot of the times the financials were fraudulent. And I think with this particular project, I don't really want to make too many claims about it just because the fallout is so new. But I mean, if you're making claims that you can get a 19.5% to 20% risk-free return on lending out your stable coin on a particular protocol, it's probably too good to be true, and you should probably stay away from it, in my view. But unfortunately, I think a lot of people, I mean, I've been hearing a lot of stories of people losing their entire life savings on this thing. You know, it was a $40 billion unwind, which is massive. And I think the repercussions of this, I think, is going to be massive. I think there's going to be a lot of new regulation. I think there's going to be SEC crackdowns. And usually when stuff like this happens, regulators will make an example out of one or two people. And some people will go to jail, but the vast majority of the stuff that'll happen is a bunch of people will lose a lot of money, and then there'll be all of these ridiculous regulations that we don't need. And it happens time and time again. So regulators tend to be more reactionary, if not proactive. So, but we've seen this in every single cycle. I've seen it in 2016. I've seen it in 2017. There's always that one big blow up that happens, and it just so happens in the stock market it was the SPACs, the special purpose acquisition companies, which we've been talking about for a long time, how those are going to blow up. The majority of them are probably going to go to zero. So many people are going to lose a lot of money. We actually did a dedicated stream talking about how Goldman Sachs is getting out of the SPAC business altogether because the SEC is potentially going to put new rules in place where investment banks could be held liable should a lot of these financial documents be found to be falsified, which 100% they are in the SPAC world. So usually in every top of a market cycle, you'll have frothy activity that'll lead the charge down. I think in the stock market, it was without a doubt the SPAC business. And now in the cryptocurrency market, it is the unwind of the nearly $40 billion, essentially Ponzi scheme but I can't say that. But yeah, it's unfortunate, and I think a lot of people lost a lot of money in that. Chris West says YouTuber KSI lost over $2 million. Yeah, and so that's the thing, right? And that goes back to what we were talking about at the beginning of the video. In every major cycle, you always have these people that are on YouTube or social media where they're making a ton of money on the advertising revenue or kickbacks of promoting these type of projects or these NFTs or these coins or even these stocks. So these, even though they probably made $40-50 million on shilling all of this stuff to their audience, and I think that's so unethical. And I even get emails about, hey, we want to work with you, we're this NFT project and this, and we're going to pay you $2,000. But it's all nonsense. It's all garbage. It's all fraud. It's all scams. And unfortunately, the way the YouTube algorithm and the way a lot of the social media platforms work is those particular people that tend to get 100,000, 200,000 views on a video are the people who are shilling these either, number one, unprofitable stocks, convincing their audience to buy it, or within the cryptocurrency space, telling their audience to buy these alternative cryptocurrencies, which are Ponzi schemes. And it always unravels, and it always happens the same way every time, where it's the individual investor that has 20,000, 30,000. They'll lose everything. And, the founders of these projects walk away with millions. But it happens in every cycle, and it happens over and over again. Hey, Phil is here. Welcome. Good to see you, Phil. GX72 says, hey Tom, Action Kid is crossing the bridge. Nice. Maybe we'll run into him. Michael, good to see you. Michael Claudia says, it's always a rat race. It's the first that make the money and then follow the copycats. Sammy Basie says, yeah, heard of the fall. Yeah, I mean, it's massive too. I mean, $40 billion to zero overnight. I mean, there's gonna be severe repercussions to that. But the regulators are always late to the game, as they always are, just like they were in 2000, just like they are in 2008. Nick Rocks is here. Cindy Foley says the Rangers just scored. So is it hockey playoffs now? I forget. Let's cross the street and maybe we'll do one lap around Married Brickell Village before the phone dies. NBA Elias says, hey Tom, did not say hello. I hope you had a good week. What's up, NBA Elias? Good to see you. Crazy week, busy week for me. Really, really busy. I even ended work a little bit late tonight. I didn't know if I was going to be able to get a stream in. Thankfully, I am. But hopefully your week was good too. Crazy week on Wall Street, crazy week in the cryptocurrency space too. But here's the good news. I always try to look on the bright side of things. It's good that we're getting a massive, massive washout of a lot of the speculative, frothy activity. Because as we've been saying and talking about on the channel for a long time now, since the lows of 2020, people have been treating the stock market like a gambling casino. And, I think this is when I agree with Charlie Munger here, saying that applications like Robinhood are promoting horrible investing principles and practices. Whenever you trade options or buy a stock, it blows confetti in your face and all this nonsense, which I think is borderline unethical. I think a lot of that excess frothiness in the market is starting to unwind, as it always does in every cycle. So I think for the long-term bullish trend, I think that's a good thing. Now, do I think the bottom is in? I think that's anybody's guess. I think we did find a short-term bottom here, only because we are now really, really extended from our key moving averages to the downside. So if you look at, you know, a 50-day or a 200-day moving average, I think, oh my gosh, I think we're really extended to the downside, and we could rally back into the moving averages and then roll over. But I think a lot of the most ferocious rallies in the stock market happen during bear markets, so just be cognizant of that. Phil says, yeah, it'll separate the real from the phony. I think you're right. I think you're right on the money. Dan, MBA Elias, Dan Tapiero said this week that BTC is a hedge for hyperinflation in crypto and outside of crypto. Yeah, and I mean, you know, I think you're right, MBA Elias. Like, as I've said, you know, I've been through all of these cycles in the crypto markets, and in every cycle there is the Ponzi scheme that falls. I think in this cycle it was Terra Luna. I don't want to say for sure that it's a Ponzi scheme. I think you guys already know my views, but I think since so many people lost a lot of money here, I don't really want to be one of those people that comes out like dunking and saying I told you so. I don't think that's really helpful. But you know, just know, you know, if there's a DeFi project that is offering you a 20% risk-free return, I mean, you kind of got to put two and two together and say that it's probably not sustainable. Hey, Estelle is here. Good to see you, Estelle. So we are now in the Brickell Mall here, Brickell City Center. Soho guys like, Tom, are you going to take equity out of your home and buy a Bentley? I don't drive, so I don't think a Bentley would be of good use. But I hope no people are doing that. Check out all the fish down here. Hey, Lewis is Tom. What did you think about eToro? They target me on YouTube and on Firefox. I would stay away from that. So all of those exchanges like eToro and Webull and Robinhood, they're all just nonsense exchanges. So here's what I would ask yourself. Ask yourself, do you think that there's any, you know, institutional money manager on Wall Street that's running 25 million to 100 million bucks that is running their money on Robinhood or Webull or eToro? Probably not. I think those tend to prey on retail investors. And if you notice, a lot of those particular people that make videos online, they'll say, hey, you know, sign up, you'll get free stocks and all this stuff. It's just, I would stay away from it. I mean, I wouldn't be surprised if Robinhood potentially goes under. Hey, Herbert says, Tom, you haven't really mentioned the greed of the buyers. It seems too good to be true, but people's always jump in anyway. Yeah, I mean, I think you're 100% right, Herbert. And that's why, you know, I think there's always a direct correlation. Like if you just, you know, type into YouTube, you know, top stocks to buy or top cryptocurrencies to buy, you'll see just how ridiculous the videos are that come up. But those are the ones, and those are the videos that the YouTube algorithm will push to the people, because, you know, that's what drives essentially the most engagement, right? So if people don't really want to learn how to do things on their own, they just want to be told what to buy, I think that happens from maybe an inherent laziness potentially, but unfortunately that's what happens. Wesley West says Miami is another hotspot for fast and fancy cars. Yeah, I think probably because the weather is nicer than New York, perhaps. Hey, Chris Beeman is here. Welcome, Chris. I love this view. And Raj, did you see that Coinbase would take its holders' assets if it becomes bankrupt? Yeah, so I did see that. I don't think that's really as big of a news story as people are making it out to be. I think that just happens to be because, you know, cryptocurrencies or like Bitcoin or something are not securities. So I think just from a regulatory standpoint, they, let's say if the firm ever went under, they could potentially use your funds that are custodied on the website as to count as assets towards their firm, if that makes sense. So that's why I've always said, look, if you're going to get exposure to Bitcoin and buy Bitcoin, you have to remove it from the exchanges, because there's an old saying, if it's not your private keys, it's not your coins. So once again, if you leave your Bitcoin on the exchanges, well, the exchanges have the private keys to your Bitcoin, and then they could essentially do whatever they want with it. So I think that's the inherent nature of people who actually understand Bitcoin. Is the biggest value proposition of Bitcoin is it's unconfiscatable money, right? So the people who don't speculate in Bitcoin and understand it, you realize that it's unconfiscatable, which means if I own my own private keys, no government, no entity could confiscate that from me. But if you leave it on an exchange, it sort of defeats the purpose of it in and of itself, if that makes sense. Sabrina Fair. What's it going to be called, Sabrina? Christopher says this is really beautiful mall. Love how it's all open and how outside is open up as well. Yeah, I think this is a pretty cool concept. I think it would only work in a place like Miami, where it's probably beautiful weather 90% of the year. But yeah, everything is really clean here. Everything is beautiful. Michael says, if it's not a personal question, do you own a house in Miami or an apartment? So I bought a house that I rent out. I use it as an investment property. Fred X says it's called expert worship. The expert must be right. Interesting. NBA Elias says Emirates to accept Bitcoin as payment announced on their airline. Yeah, I did see that today. You're right. Good to see you, Minraj. Welcome. XXX says yay, Miami. Good to see you. Sabrina Fair, let's not speculate on net worths here. But, so guys, so this building right here, the city center, if you look at the top, this is actually, sometimes I work out of this building. So in the WeWork, it's actually a really cool office. So if anybody's in Miami and you ever want to, work together or grab a coffee or something, oftentimes I'll be working out of this WeWork. But, this week I actually did try the other WeWork building, which is across the river in the, I'm trying to figure out what the name is, 200, what's it called? 200 Southeast Financial Center. Beautiful WeWork offices there too, that I've been trying out. So I think they're actually going to be opening up another one, maybe in Wynwood perhaps. Mike C says if somebody calls themselves an expert, they're rarely an expert. Hey, Dutchman, good to see you. Action Kid, what's up, man?
What's up? You're going down, I'm going up.
Yeah, my phone's gonna run out of battery in 2 seconds.
Oh, yeah?
But yeah, I'll catch you on the way back.
All right, you're going down like 2 minutes.
Yeah. Action Kid, what's up, man? That's so funny, we just passed him. But everybody, I'm gonna have to end the stream because my phone is on 3%. And maybe I'll say what's up to Action Kid in a minute. But my phone's on 3%, everybody, so I do have to go. Triple G says, Tom, what is your comment on the latest CPI numbers? So CPI numbers came in hotter than expected, but they did come in a little bit lower than last month, which I think is good. But the only thing that I noticed that was a little bit concerning is airline fares essentially doubled. And I think I told you guys this. Usually I pay about $50 to buy a flight ticket from New York City to Miami. This time I paid, well, I didn't pay it. It was $750 for one airline ticket from Miami International Airport to JFK. Luckily, my client was nice enough to spot me on that. But that was a huge proponent of the CPI. I mean, that's almost a 700% increase. It's insane. More than that. But everybody, I'm on 2% battery. I need my phone for the bus, but we will be live tomorrow. If you guys want to still see and enjoy Miami, please check out our friend Action Kid, who is up here. I may go say what's up. So if you still want to hang out on the stream, please go over to Action Kid's channel. He's right here. So please hop on over there for some more beautiful sights in Miami. And we will see you guys tomorrow, 8:30 p.m. Eastern Standard Time. I don't know if I'm going to stream from South Beach or Brickell. I think that'll be up for debate. But everybody, I will see you later. Andy, thank you for joining. Wesley West, British Gray, Sally, Jane M, Tom M, thank you. Jerry, thank you. DJC, appreciate it. Estelle, thank you so much. Ryan Royal, Otto, Ruby Falcone, Lisa, Jane M, John, Cindy, Judy D, NBA, Elias, Western Maz, Dave, into the Mighty Bull. Have a good night wherever you are, because there's always a bull market somewhere, and you just need to know where to look. So I will see everybody right back here tomorrow. If you enjoyed the stream, leave a like on the video and subscribe if you are new. Have a great weekend, everybody. And please head over to Action Kids stream if you want to see more of Miami. So talk to you next time.